The recent downturn in the AI stock market has stirred considerable concern among investors and analysts alike. Over the past 5 days, the market has witnessed a 5.6% decline in Nvidia stock, a key player in the AI space. This trend is not isolated, as other AI-related stocks, including Supermicro, have also experienced substantial declines. The market sentiment, as reflected by the Greed and Fear Index, has shifted from a state of extreme greed to a less greedy stance. One of the primary catalysts behind this market movement is the impending release of the Federal Reserve's FOMC minutes. Scheduled for tomorrow, these minutes have injected an air of uncertainty and skittishness into the market. Investors are particularly sensitive to potential signals from the Fed regarding the need for interest rate hikes. The market's nervousness stems from the Fed's possible response to robust economic indicators, such as impressive job numbers, Producer Price Index, PPI, and Consumer Price Index, CPI. The impact of these concerns is evident in the Treasury markets, where the 10-year yield has seen a notable increase from 3.8% to 4.24% in just 6 weeks. This rise in yields is affecting interest rate-sensitive plays, further contributing to the overall market downturn. Another noteworthy aspect is the shift in expectations regarding Fed rate cuts. Initially, the market priced in 6 to 7 rate cuts at the beginning of the year, but now it barely anticipates 3 cuts by December. There is a growing apprehension that the Fed might signal a need for rate hikes instead of cuts, adding to the market's unease. Economic indicators are providing mixed signals, adding an additional layer of uncertainty. While the U.S. has reported strong CPI numbers, Canada has seen lower-than-expected CPI figures. This disparity creates ambiguity about the overall economic situation, making it challenging for investors to form a clear view of the market landscape. Analyzing individual companies, Barclays has assigned a $961 price target to Supermicro, SMCI, valuing it at 32 times 2025 earnings per share, EPS. However, some analysts find this valuation optimistic, given SMCI's role as a server rack company and the potential for increased competition in the market. This highlights the importance of critically evaluating valuation metrics, especially in dynamic sectors like AI. Emphasizing the need for a nuanced approach, the discussion delves into the importance of considering price-to-earnings (PE) ratios in conjunction with growth rates. Analysts and investors alike are urged to calculate the PE ratio and PEG ratio as factors of growth, underscoring the significance of reasonable valuation in the decision-making process. A comparative analysis of growth projections further enriches the discussion. SMCI is projected to achieve growth rates between 15 to 30%, Nvidia at 29%, and Tesla leading with an ambitious 39%. However, the potential impact of competition on SMCI's growth rate is a subject of concern, highlighting the need for investors to factor in competitive dynamics when making investment decisions. In light of these market dynamics, the investment strategy considerations become crucial. Investors are advised to critically evaluate the sustainability of high growth rates, considering potential market shifts and increased competition. The emphasis on personal investment strategies includes the prudent practice of trimming positions and maintaining awareness of potential market resets. In conclusion, the recent downturn in the AI stock market is a multifaceted issue influenced by various factors, including Federal Reserve actions, economic indicators, and company-specific valuations. Investors and analysts need to navigate these complexities with a careful and informed approach, considering both short-term market fluctuations and the long-term viability of their investment portfolios. Please go ahead liking, subscribing, and sharing with friends to support our content. The information is for general purposes. Viewers should conduct research and consult professionals for financial decisions.